All right. My name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to give a quick tip. This is more of a quick tip or a how to determine your estimated taxes each quarter. This was talking with a client just yesterday, and we were walking through some methods to determine estimated taxes. So they had not paid taxes throughout the year, but they wanted to make sure that they got something in before the last quarter due date, which is normally January 15th of the following year. So we were trying to get an idea, and we didn't want to do a all out tax estimate. Yes, mainly because of the price that it was going to cost them, but we wanted to get some rough estimates or rough numbers. So I laid it out and it's something that you can share. So if you don't want to go through an actual tax estimate with someone, because it could cost you a few dollars to do it if you're not up for that. But here's a quick way that you can get a rough estimate. So it won't be 100% accurate. You'll be in the ballpark, and that way you'll avoid having to pay a ton of taxes instead of waiting when you actually file and you won't owe a ton of taxes. So quick and dirty way to figure out some estimates. So the key here is you want to figure out what your marginal tax bracket rate or your tax bracket. You hear that term a lot, tax bracket, tax bracket. Your tax bracket is essentially where your taxable income lies. And the key here is taxable income, not gross, but your taxable income, where that falls within the tax rate chart. With most, at least with federal and with most states, it's a graduated tax system. It works in tranches or layers. So everyone's first 10,000 is taxed at one rate. Actually, I think it's zero. And then the next 15, 20,000 or so is taxed at 10%. The next 30,000 is taxed at 22%, and so on and so forth. Don't hold me accurate to those actual numbers and tranches, but the idea is that it works in tranches as far as what the tax rate is. So you want to find out where your taxable income is. So that's after all your deductions and everything, where you fall within that chart. Take a look at where you fell last year would be a good indicator, or if you're keeping a running tab of your income and expenses, even more accurate is your net income for the year, and use that number to see where you fall within the actual bracket. And that will be the percentage that you want to pay. For example, say that your business made 100,000, you had roughly 70,000 in expenses. So that leaves you about $30,000 to pay taxes on. So take that 30,000 and see where that falls within the brackets. Now that's assuming that it's just you that you're filing on your own. If you're filing on your own, then use that. If you're filing with a spouse, then you'll combine their income as well. You may want to use what they did last year as their income bracket and find out where you fall. And you'll see that percentage. And this is all something that you can look up. If you look up tax brackets, it'll tell you, and it'll give you the ranges based upon your filing status. So if you're single, that'll be one chart. If filing jointly, that's going to be another chart. See where you fall within that chart, and then pay that percentage accordingly as far as where you fall. It won't be 100% accurate, but again, it will put you in the ballpark. Now, some folks pay taxes quarterly because everything I explained by itself would work if you're looking at numbers for the entire year. However, if you're taking it quarter by quarter, you're going to project what you did or anticipate what you did for the year. For example, let's say you're in the first quarter and your net income was 25,000 for the first quarter. So normally what we do in my practice is we assume that that's what you're going to make for every quarter. So 25,000 a quarter, we project you're going to do that for the entire year, 4 quarters. So we project that your net income will be $100,000 for the year. So we take that 100,000 and that's where we check our chart and see where you fall in that. And then you do that every quarter. So come quarter two, let's say that instead of 25,000, you made 30,000. So between quarter one and quarter two, you netted 55,000. So again, we project that for the next half year. So we assume now that instead of 100,000, you're going to make 110,000. So that's the number that we use. So we project out based upon prior performance, and then we adjust our payment based upon that. Now, in some instances, you might overpay in some quarters and then underpay in others, and then you may have to make up the difference, or if you overpay, you'll get the difference back. So going back to the same example where in quarter one, we projected we were going to make 100,000, but then in quarter two, we projected that we were going to make 110,000. But in quarter one, we paid as if we were only going to make 100. So now when we do the second quarter payment, we have to make up for that difference of the 10,000. And then we prorate our payment so that we make sure that we get to paying taxes on that 110,000 over the course of the year. But I got a little bit more involved than I wanted to. But again, a simple way to do it is take your profits for that quarter, multiply it by 4, find where you fall within that chart, and that's the percentage that you're going to pay. Do that for federal and state as well if you're at a state dead taxes. One other caveat, if you're part of a partnership or a single member LLC, you're also going to want to add the self-employment tax. So take that bracket that we spoke about, at least for federal, and then add 15% to it. It's 15.3% to be exact, but just take 15. So if you're in the 22% bracket that you look up, then you're either a Schedule C filer or in a partnership or 2 or more person LLC, add 15% to that number, to the federal side. You're going to cover your self-employment / Social Security taxes. So something quick and dirty that you can do on your own if you don't want to go through an extensive estimated quarterly tax analysis. So quick and dirty way to at least get you paying something so that you don't get killed come April or whatever it is that you file your year-end tax return. So that's all for today. I hope this was helpful. And if you have any more questions about this or any other tax or account related questions, feel free to reach out. I'm happy to help. So that's all for now, and I'll talk to you in the next one.